What up, guys? It's another episode of UniFiTV. Let's get started.
But a Brexit or British exit could have wide-ranging implications both for the UK and the world's economy. And first, it might help to understand what the European Union actually is. The idea for it came after the Second World War, when there was understandably a desire to keep the continent from tearing itself apart yet again. And it has since evolved into an economic union of 28 countries whose citizens can trade and move freely across borders and who negotiate international agreements as a bloc. But despite being a member, Britain has always had an arm's-length relationship with the EU. For instance, it doesn't use the euro, and some British politicians have been openly hostile right to the face of EU officials.
This Thursday, Britain has a referendum vote on whether they plan to leave or stay within the European Union. Now, this is a huge vote that has consequences reaching the United States even. So we're going to talk about the pros and cons, why each side is for and against leaving the European Union. So let's start with why Britain wants to leave the European Union. For one, they have to pay to be in the European Union. So I can't remember the exact value, but it's a few £100 million a week is what they calculated to stay within the European Union. Now, another one, and this is the primary reason, is immigration, actually. The rules within the European Union state that residents within the European Union can go to and from whatever other European country freely. Now, immigrants coming especially to Greece from Syria, if they decided, have the ability, because both Greece and Great Britain are in the European Union, those immigrants have a right within the European Union to immigrate and settle within Great Britain. Now, Great Britain is required to provide them education, insurance card, their national health service, and provide them the guarantees that every citizen of Britain has. Now, this puts a huge anchor on the British Treasury as they are trying to fund and put money into schools and hospitals to help these new immigrants. People who are against staying in the European Union cite this, saying that they could spend that money on British citizens rather than immigrants. To preface this, let me state that the British people use their own currency. They use the pound rather than the euro, the pound being significantly stronger than the euro. And they do not have to, and I say they, the British or Britain does not have to bail out bankrupt European Union countries like Greece. And we saw that with Germany, where Germany had to influx a large amount of capital into the Greece economy in order to help stabilize it. Now, what is pro staying in the European Union for? So, like I said, they have to pay to be in the European Union, be a member. A part of that agreement is free trade within every country that's operating in the European Union. So there's no import tariffs, there's no significant taxes, there's free trade, and it allows Britain to export to a huge market. If they decide to leave, they would need to start paying taxes and import taxes when they export to other countries. Now, this is a huge reason why people say the money part doesn't really matter, because our economy is going to be hit hard if we leave the European Union. Now, you're going to say, as an American, as a business owner, why should I care? It's June 20th, and today the Dow went up 250 points because new polls came out saying that Great Britain planned on staying within the European Union. That's how the polls on the votes showed. So, amid that, the stock market felt more assured that England or Great Britain would stay in the European Union, and therefore went up. Now, why would it go up? Well, Great Britain has the fourth largest economy in the world. So, if they do decide to leave the European Union, there would be dramatic economic consequences. Like I said before with the free trade, large members of the economic world, including the IMF and Oxford and many other economic institutions, say that the British stock market could decrease in drop 25% of its value if it decides to leave the European Union. Now, this is huge and important for the United States because of how much we export to Great Britain. The United States has a growing economy, but slow, and it's not very stable, and that's why we've seen interest rates so low. Now, to connect the two, we export a lot to Great Britain because we are such close allies, and this is vital to the strength of our economy. If Britain decides to leave the European Union, and let's say the analysts and economists are correct, and the Great Britain's economy takes a huge hit, well, that means our exports to Great Britain will decrease. It means the British economy will begin to stagger, and their stock market will take a big hit, meaning our stock market will take a big hit because of how many financial institutions are linked between London and New York. So, if you're a small business owner, this vote Thursday actually does mean something to you. The state of Britain, and whether they choose to stay within the European Union, has a direct consequence on your business. Let's look at it like this. Like I said, the United States exports a lot of things, a lot of goods and services to Great Britain. But vice versa is also true, where Britain exports a lot of things, a lot of raw materials and manufactured goods to the United States. Now, we get those prices relatively cheap because of the free trade and because of good relations and other variables. Now, if Britain, if they leave the European Union and their economy goes south, that means businesses will shut down. That means exports will decrease, meaning that our imports from Great Britain will increase. Now, to be fair, American businesses import so many raw goods and manufactured goods that the price might not be a huge factor, and you might not even see a huge change in price. It's possible, yes, but the likelihood is that we would not see a huge change in price. The biggest effect that it will have is on the stock market. We see that now, where the stock market and the Dow have been dropping amid fears of Brexit, so Britain leaving. This could trigger a potential global recession, as did the financial meltdown of 2008. We live in a globalized world where everything is connected, and the stability of our global economy relies on the big players. So, it's like a domino effect. If Great Britain's economy falls, it's very likely that we in the United States could see a recession, not a depression, but a recession. And it's even more prevalent because the United States had a recession in 2008, and recession, boom, bust cycles tend to have an 8-year cycle. So it's about time for us to have a recession. Now, come Thursday is when you should be paying attention. What should you do if you see the news and England decides to leave the European Union? Because that's what you should be concerned about, and for the most part, as an American. You should be prepared for a drop in the stock market. Prepare your portfolios, your retirements, your investments, because that is what's going to happen. And also prepare and definitely keep an eye on the news in the United States, because like I said a few minutes ago, this could easily be the start of an American recession. Now, do I know that for a fact? No, I don't, but it's pretty likely, and it's definitely something that American businesses, American consumers, and Americans in general need to have in mind. You wouldn't think that Great Britain has the fourth largest economy, but it does, making it a central economic power. Therefore, if it falls, the United States will be, in its economy, will be a little less secure. I hope that this has been informative. As always, please leave a comment, and I'd love to hear what you'd want me to talk about in our next episode. Until then, I'll see you guys next time.